Welcome, everyone. It is my pleasure to be here with you today for this very important conversation about what due diligence means when you are an angel investor. Considering we have a lot of angels in the Fourth Effect community, we have a backroom investment club, and we have a lot of startups who are fundraising and fundraising from angels in our back room and in general. This topic is near and dear to our hearts. So we are really excited for this conversation today. We do have incredible panelists and we have an awesome moderator. But before we get there, before we dive in, I do just want to say a brief word about the Fourth Effect. So for those of you who are not already members of the Fourth Effect, for those of you who don't know about us, we are a new kind of community-driven board and investment marketplace for startups and growth stage companies that are looking for mentors and advisors and experts and funders, including angels, and for women who want to break into that board candidate pipeline and or invest, as well as for allies, other kinds of investors, etc. So if you are listening and you are a founder of a startup, a growth stage company, please join us so you can tap into the incredible talent pool that we have of 2,000 plus experts, advisors, and angels. Come seek funding in our backroom investment club and benefit from the powerful peer network of 800 plus other startup founders. If you are listening and you are an executive and or an investor, I just want to put this image in your mind. If LinkedIn and Bumble had a baby, and then you fed that baby just a strict diet of only AI, that is the Fourth Effect. So what I mean by that is that we are the only network that you need to land that first advisory board seat and or start investing. So if you are not a premium member, you cannot see Bumble for boards yet, please do that, and do that in the next 10 days, because actually we have a promotion running for Women's History Month. So every membership for the next 10 days is 50% off. So it's really a great opportunity. If you haven't gotten that premium membership, do it now. We will put in the chat a link to come to a platform tour. We do them twice a week, Mondays and Thursdays at 12 p.m. Eastern Standard Time. So that's a great way to network, meet other people, see inside the platform, and we can get you going with onboarding. You can also just sign up directly through our website. If you go to our website, you can create an account for free, get started for free inside the platform. Once you're in the platform, it's very, very easy to upgrade and become a premium member. You just click on membership. So we will share the link to create the free account, the link to the platform tour. And then the last thing I have to push is Board Bootcamp. That is happening on April 10th. We do them every 6 weeks or so. If you are a member and you have not come to Board Bootcamp yet, I really recommend that you come on April 10th. It is intended for both founders and for everyone else. It's really 2 hours well spent. If you are not a member, you can still come to Board Bootcamp. And in fact, the 50% off applies to that as well. So we'll make sure to share that code and the link to sign up for Board Bootcamp. We really hope to see you on April 10th. And then I guess finally follow us on LinkedIn. Make sure by creating that account in our platform, we'll keep you in the loop and send you our newsletter. So enough about us. Let's get to the point of today, because we could not be more excited for this conversation. It is with two veteran angel investors, Annie Evans of Dream Ventures and Kelley Arena of Golden Hour Ventures. And it is moderated by the utterly brilliant and uniquely fabulous Abby Sugar, who is a fractional executive and strategic advisor. So Abby, if you want to join me here in the spotlight, Abby and the Fourth Effect go way back, so way back to the fourth floor days, really to the very, very beginning. Abby is many things, including an incredibly talented writer, but also a former CEO and founder of her own startup, Play Out Apparel. And we thought, who better to moderate this conversation with Annie and Kelley than a startup founder who has successfully fundraised from angels and who also has sat in the advisor seat and is advising founders who are fundraising from angels. So we could think of no one better. So with that, Abby, let me turn the spotlight over to you so that you can further introduce yourself and introduce your fantastic panelists.
Thank you so much, Breen. I'm not muted, so that's great. But thank you for that beautiful introduction. And as Breen mentioned, I am just the biggest fan of the Fourth Effect because uh, they have a specific mandate, right? And I'm really excited to be here bridging that gap, right? Because so many founders don't know where to start, and so many angel investors don't know where to start. So I think that it is really great to have Kelley and Annie, and I'm excited to be the one moderating this. I met both Kelley and Annie when I was raising for my first startup. And so even, they're just amazing people. And here we're going to introduce them specifically. So Annie Evans is the founder of Dream Ventures and has invested and sourced over 25 million for women-led ventures. Some of those include Copper, Topicals, Within, Brightland, Partake Foods, and Another Tomorrow. And Annie has a community of 500 plus angel investors. They include C-level executives, content creators, founders, strategic experts, and operators who co-invest in her angel syndicates. Also, we have Kelley Arena, who is the founder of Golden Hour Ventures. She's an angel investor and a consultant for women-founded businesses, as well as an advocate for women in finance. She began her career at a professional football franchise, Go Eagles, and that's Kelley's words, not my words. I am from Michigan, just saying, have to throw that out there. But rotated through various companies, such as Johnson & Johnson, and moved on to investment banking at Merrill Lynch, specializing in public finance and healthcare. Kelley founded Golden Hour Ventures with one mission in mind. And I hope that everyone here with us, I believe, shares this mission. That's why we're all here, which is to make women rich. And the goal is to activate a new class of female angel investors, bring women closer to their finances, realize the power of our collective consumption, and divert the flow of venture capital from 98% male-founded companies to something much, much more equitable. So we're going to talk more about what value angel investors can bring to the companies that they invest in and the startup founders that they invest in. But Kelley also has consulted with dozens of brands and loves helping founders find their voice. She has a portfolio of 23 companies, boasting 21 companies founded by women. So in terms of today's topics, I think that you two are the perfect guests to have. So welcome. Is there anything that you'd like to add to your bios or anything that's happening right now that you want to share with us before we dive into some questions?
Absolutely not. I hate talking about myself. Really excited to
talk about like what you're passionate about, right? Let's talk about fundraising, founders and investors, and women and money, right? So I think that the most important first question is, how did each of you start angel investing?
Annie, you first.
Okay. So it all started in 2019. I actually, after a few bottles of wine one night, I was sitting with some girlfriends, and that's where all the best ideas come, of course. And we were chatting about all of these amazing female entrepreneurs that we knew that needed some funding to bring their idea to life. And after a long dinner party, all of a sudden we were like, wait a second, Kickstarter for female founded companies. And so we came up with this idea and we started Googling, and we came across a company, I Fund Women, that was already doing that. And so instead of us starting when they had created this, I reached out, sent a cold email to the founder, and I said, had this idea, you're already doing it, how can I help? And she said, so happy that you reached out. I have all white dudes on my cap table, and I'd really like some women, considering that we're I Fund Women. So I collaborated with Karen Kahn and helped her raise a $2 million round with angels that were women. We brought in about 40. And as I was helping her, I became so excited and honored to be part of the journey of helping her that I decided that I wanted to write my first angel check. And even though I was an advisor, I had equity, I thought to myself, I believe in this mission so much that I want to like put my money where my mouth is. And so that was my first one in 2019.
And my first angel check was in 2018, and it was actually with someone that I worked with in investment banking at Merrill Lynch, Michelle Larrabee, the founder of Within. My very first angel check, I had no idea what I was doing truly, but what I knew was I trusted this founder. I believed in this founder. She was raising her pre-seed, and I wanted to be a part of it, and I wanted to support her on her journey. At the time, I was doing a little bit of consulting, but really just kind of like building financial plans for operators and creative folks. And so really kind of followed along her journey of that raise, and, you know, saw the challenge of it, particularly as a female founder, particularly early stage. Wrote my first check, loved it, got to really be in the weeds with her. You know, we were sitting around like naming products and brainstorming, and I really like realized how different the startup finance world could be as compared to my old finance world, which was very male dominated, not particularly full of inspiration, not connected to purpose and drive. And that was the first angel check I wrote. I really caught the bug, and I caught it a little too hard. I got like the startup flu, and my initial checks were really big actually. And so I think I learned some lessons along the way. And, you know, we'll get to this, but what we do now, and as far as our syndicates, is really kind of like lower that initial check size. You know, when I was first angel investing, the only opportunities I had were direct to cap investments, which is, you know, $25,000, $50,000 checks. And when you're first starting out, it's really intimidating, and not all of them worked out so well. So now I'm a big believer of building a portfolio, starting small, but learn by doing, because, you know, I think we are prone to over preparedness at times, but really kind of jumping in and writing that first check. Like that's how I learned everything.
I feel like there's so many jumping off points from everything that both of you just said. But, you know, one of the things that you said, Kelley, about sort of the old investment boys club and seeing the opportunity here in angel investing and how we can change the face of wealth distribution really through this exciting time and exciting opportunities that you get energized about, and about working with founders. So I think that brings me to my next question of what makes you decide if you want to invest in a company? What do you look for? And I think that because we were talking about the beginning of your journey, has that changed, or how has that changed in terms of those investments? You touched on it a bit, Kelley.
Yeah, it's changed a whole lot. I think really at the beginning, one, I didn't have a community around me of folks that were angel investing. In fact, it's how I met Annie. It's a serendipitous tale where I was like, okay, this is where I want to be. I want to put capital toward women founders. And so I'm just going to try to like immerse myself in this space, write a few checks. So I was actively looking for deal flow. And I saw Annie had posted a company that she was fundraising on behalf. She was raising a syndicate for, at the time, it was the Accessory Junkie. It's now Mavion, a Web3 company. And I reached out to her, and, you know, we were chatting about this company and how she found them. And, you know, that's a whole story for another day, me and Annie's origination story. But I realized like, oh, how great it is to be able to talk to another woman about what they're investing in. And my experience had been investing was very much a conversation that was happening amongst the boys, and it was very comfortable for them to talk about where they were putting their capital. And in my conversations with my girlfriends, I really wanted that feeling of it was okay to talk about, you know, what's your skincare routine, and where'd you get that blazer, and also what are you investing in, and like how can we make that conversation just as normal as the rest of it. So at the beginning it was just like what deal flow I could get my hands on. Now I'm really, really proud to say that I see a lot of deal flow, like a ton of deal flow, and I can be a little more discerning. But as far as, you know, what I look for, I think it's always founder first. Do I believe that the problem that founder is trying to solve, are they the person that's meant to be doing it? Are they passionate? Are they aligned? Can they get up and do this every day? Because I think, as you know, as a founder, it's quite the journey. It can be frustrating. You have to have a why underneath it all to kind of keep you going. And if I feel like it's disconnected in some way, or or if it's just not a problem that I resonate with and I don't think I can be a value-added investor, it's probably a pass for me. And that's the difference kind of between, angel and being more ROI, financial ROI specific venture firm, that there is like a subjectivity to angel investing.
Love that. What do you look for, Annie?
So I would say first and foremost, is it a problem that I'm excited to solve? So I love to invest and get behind a company when it's sort of like that saying, create the things you wish existed. So if I've been dreaming about like, this is a really annoying pain point, I wish there was a solution, and I get like an opportunity to invest and be part of like bringing it to life, that's like my favorite sweet spot. So often, as Kelley, I get a ton of deal flow, and oftentimes I'll see a company, I'm like, I know this is going to be $1 billion idea. I just have no connection to the problem that they're trying to solve. So it's not a fit. So I really like to invest where, again, like I really want to bring this to life or help it grow. And I also think that I can add value through like my personal network. And then also just founder, like all day long. It could be, you could have the best idea in the world, and we all know execution is everything. So, I do more diligence on the founder and their leadership style and like how they operate, and more on the EQ side than I do on like the financial side, because usually when you're investing early, that stuff is all like, who knows, but really it's about the person.
Do you feel like that's a big difference in a positive way, in my opinion, between female investors and male investors in terms of that focus on EQ, right?
I've definitely, you can, like, perfect example, Andreessen Horowitz made the biggest investment of 300 and some odd million dollars into a founder that, breached fiduciary, responsibilities, and basically was a huge fraud. And so I think that's one example of, I wouldn't have chosen to bet on that founder again, probably.
Yeah. So both of you have talked about just the large amount of deal flow that you come across, right? But for someone who's just starting out, I know, Kelley, you mentioned it's a whole separate story how the two of you met, but how does a new angel investor get access to deal flow?
Yeah, well, thankfully, I think the climate has changed a lot. I think there's a lot of people working on a very similar problem, democratizing access to really high quality deal flow, democratizing access to cap tables. But of course, I'll say in a very self-serving way that Annie and I have a great deal flow list that I would encourage you to join. I think we're sharing that in the chat. But there's also a lot of angel syndicates that are out there right now. She's Independent, The Council, Pipeline Angels, Golden Seas. There's so many that you can join as a way of doing diligence as part of the community. I think that immersing yourself in the startup ecosystem is just a great way to kind of familiarize yourself with those conversations. Annie and I do a lot of in-person events where we feature founders, and I think even just being in those rooms and hearing the kind of questions that other investors are asking too is just a way to kind of just immerse yourself in the language and the vocabulary. Just like any other industry, there tends to be jargon and a language that's new and unfamiliar, but it's not that complicated. It's just familiarizing yourself.
I think it's finding the right places to show up, right? And, if we bring this question back to due diligence and how that works for your investments, I know that both of you have experience investing your personal dollars as well as investing with your syndicates. So does the founder due diligence or does the company due diligence differ for those processes, or what is that like?
Kelley, why don't you take this, because you have a stellar diligence questionnaire that.
Thank you. I share that with you all too, if that's something you want to share. A lot of times for new angels, I'll just send my own diligence form just because I think it's helpful to see what kind of questions another angel asks. But yes, definitely. I would say there are times where something appeals to me quite personally, or I have a personal connection to the problem or to the founder, and I want to put my capital behind it, but I don't necessarily feel comfortable bringing it to our network of angels. And I think many folks in our network are newer angels, not all of them, but many are just kind of getting familiar with the landscape. And so when we deploy capital via syndicate, which is just a group of women who are pooling their capital together so we can make our small checks one big fat check and put it on the founder's cap table. I treat that somewhere as like a hybrid between like a venture investment and an angel investment. So I have a diligence process that I go through that is extensive-ish, I would say, for an early stage company. And I look at the size of the opportunity. Does it feel scalable? Are there real exit opportunities there that feel like they could realize in the next 5 to 10 years? Also, I think just helping our other folks in our syndicate understand that it is like a risky asset class, that 90% of startups do fail, that if the thought of like losing that investment makes you sick to your stomach or would keep you up at night, it's probably not the move for you. But if you're really excited to put capital behind a founder you believe in, if it feels impactful to you, again, like as we said, 1.6% of venture capital went to women-founded companies last year. So, to me, it feels like, I have this Venn diagram that I use. It's like the way I angel invest is like the middle of consumerism, philanthropy, and investment, right? So you can be impactful. You can like put your discretionary.
I love that. That's amazing.
Feel the return at the end of the day.
So good.
Yeah, that's incredible. Annie, is there anything that you want to add to that, or shall we slide into a related question?
Let's slide
in. So I love your Venn diagram because it brings me to the next question that I have, which is, how do you add value to a founder as an angel? Related to what you just said, Kelley, I recently was speaking with someone and we were talking about how money is not the solution. It's a way to execute the solution. So when you're investing with a founder, what do you think the role is of an angel investor in their portfolio companies, and what do you want to add to that founder or to that company with your investment that's not just dollars?
Yeah, Annie, you take this first. By the way, if you've got Annie Evans on your cap table, you are the luckiest founder on the planet. So why don't you give a couple of examples?
Thank you, and you as well. So I would say that the simplest thing is reading the investor update and looking at the asks and seeing if there's anything that you can be helpful. It's usually hires, resources for digital marketing agency, a PR firm. And so a lot of times it can be as simple as reading that section and thinking to yourself, can I help with making any connections? So I would say start there. And, also just like good old fashioned grassroots marketing. Like, let's say that you invest in a beverage, you're going to a dinner party, bring that beverage every single time as your hostess gift, share it with everybody around the table, talk about why it's so unique and wonderful. Like even just simple things like that. We invested in a wellness brand. I did all my Christmas shopping there for the holidays, like from their site. So there's so many ways that you can make an impact through your wallet, talking, sharing, reading the investment update. And I would say the last thing I would add is the way that Kelley and I do our syndicates is that after we invest and we bring everybody together, we host what we call a post-close celebration with the founder and all of the investors. So the lead VC, anyone who went direct, and then all of the angels. And we bring everybody together in person, and the founder's like, yay, I closed my round. We clink a glass or a coffee, and they share their top 5 goals now that they've closed their raise of what they need. And we do this like in-person brain think tank where all of the angels are in a circle and they're like, oh, you need a real estate person to open your second location. This was an example from within we helped them raise their Series A. And there was someone that was like, oh yeah, I totally know the perfect person. So that's a few ways.
Yeah, and I would add, it also, really depends on the founder and, how involved they are with their cap table. I almost screen for that when I'm angel investing because I really want to be impactful. I think that my impact can outweigh my dollars sometimes, if that makes sense.
Absolutely.
$1 billion fund. I wish that I did one day. But another good example, syndicate we raised for Another Tomorrow, most of the folks in that syndicate wrote $10,000 checks, but they happen to be launching in Neiman Marcus in the Philadelphia area next month. And one of the angels happens to live in the Philadelphia area. So like putting on a big launch event and inviting like 50 of her friends from that area to come. So you can just see like the exponential impact of what happens when, even if you've written a $5,000 or $10,000 check, like your impact can be so much bigger. So now she's bringing in her entire community to spread awareness about sustainable fashion and why it matters to pay attention to where we put our dollars. And also I would say, like, even if you've got 100 followers on Instagram, and like if you post it with the link of companies that you care about, even if you're not invested in them, you just like believe in the mission and what they're up to. Like this is, what I'm thinking about when we talk about the power of our collective consumption. Like women control 80 to 85% of consumer spend and yet get only 1.6% of the venture dollars. Like if we all just really paid attention to where we're shopping and where we're promoting, like that can be really impactful too. And I just find that impact amplifies once you're actually financially invested. You feel like you've got some skin in the game, so you're more incentivized to be impactful.
I mean, I love everything that both of you are saying. From just a community building standpoint, right? That amplification that you were just talking about, both of you. One of the things that you mentioned from both the investor side and the founder side is investor updates, right? So whether it's monthly or quarterly, I'm going to tell all the founders, this is something that, as Bree mentioned, I am a writer, but this is something that I did diligently, right? But then as a founder, make sure you're doing that. But as an investor, make sure you're reading them, because I have had the experience with male investors who I would say, let's get on a monthly update call, and they would skim my monthly email update that I put time into and was really providing, this is my ask, this is where I'm seeing success. And they would not have read it. They'd be reading it as we got on the phone, right? And so it goes both ways. And I really, really love what you said about that, Annie, in terms of how communication takes place between founders and investors should look for communication from their founders. And hopefully the investors are listening and paying attention. So yeah, I just wanted to say thank you, both of you, for that. Since we're talking about this angel investor journey, can you share one significant lesson that you have learned along the way? Or 500 lessons that all tie together, right?
Yeah, so many lessons. I would say one of the biggest one is really don't invest more than you can stomach losing. I would say, again, angel investing is risky. So I think there's a few ways to mitigate that risk. One is like deciding what percentage of your portfolio, or maybe you're looking at even as a percentage of your discretionary spend, wherever it kind of slots into what feels good for you. I would have some kind of framework around it that kind of gives you comfort and confidence as you are evaluating deals. Maybe it's sector specific, maybe it's stage specific, maybe it's mission specific. I would also think about, what kind of impact you can add, what would feel fun for you. I feel like, having a little bit of fun in this process has really kept me here. Like I really, really love talking to founders and seeing what they're building. And I'm particularly partial to women founders because this is where bias comes in, right? Like this is where bias actually is helpful in some ways, where I think if we've got a lot of representation on the investor side, you end up funding a lot of different sorts of problems and things that don't just look like things that the white guys are trying to solve. So I would say putting some sort of framework around your investment thesis is the biggest lesson I've learned.
What about you, Annie? What's your biggest lesson learned?
So many, they're all running through my head for sure. I would say that in the beginning of my journey, in I would say 2020, I got the bug and I was super active and I was angel investing a ton. And I would fall in love with an idea. Many times it was a consumer company, many times it was CPG. And I have learned that those businesses are incredibly capital intensive because of the production, manufacturing, inventory side of things. So now I'm a lot more discerning when people are dependent on having to raise in order to fund inventory to then sell. I've had a few that have gone under because they were just totally beholden to having to raise and they weren't able to. And so that was sort of just, I mean, very like minutia detail, but just something that I'm a little more
I,
just on
I
that.
think that's great because that also, though, in future investments gives you that education that you can provide to a founder, right? So if if you are going to invest in a CPG brand again, you bring those lessons with you, right? And I say this as someone who has, had to fund inventory and whatever, but teaching founders that you can use financing, right? And as an investor, you can bring, this introduction to a banker that can help provide PO financing, for example, outside of just your direct investment, right? So, Kelley, you touched on this very briefly in terms of risk tolerance and investing as an angel investor, but is there a specific percentage or number that you suggest when it comes to your investment portfolio? What percentage should you allocate to angel investing?
Well, I'd love to start with a disclaimer that I'm not a financial planner. So no one come from me, but I think maybe what would be helpful is I can share my own framework. And if it's resonant, you can talk to the people that help you manage your own money or your partner or whatever that looks like. But for me, it's 5%. And it looks like 5% of my investment portfolio, but also it bleeds into discretionary for me too. And like, we love to, we have all kinds of taglines that we use when we're trying to promote angel investing, but it's like, can I skip the handbag? Like for me, I get so much more dopamine out of funding a women founder who is like building something that I really believe in, as opposed to, buying that fancy handbag. Or, maybe buying the table at the gala. And I'm a fan of the not-for-profit world. I'm a fan of philanthropy, but I also see how much impact is being done by women founders. And it's so quick. It's so quick. I think about, what's happening in the reproductive rights space and how fast that's changing and how terrifying it is. I would rather spend my time funding founders who are shipping Plan B and Plan C across state lines and are able to make impact literally tomorrow, as opposed to spending my time and money on policy change, which is slow moving. Like I want instant gratification. I want to know that my dollars are going immediately toward impact of things I believe in. So yeah, I would start there, but 5% is the framework that I use. It can be higher or lower to you. I kind of know that, like, I know that if those dollars go away tomorrow, I'm not going to love it, but I'm going to feel really good about even funding a founder's failure, their first failure that's going to go on to be one of the kind of women who like change the world. I think we like glorify startup failures and like for men, you hear about their fourth startup being their unicorn. I want to give opportunities to women.
That's great. Do you think, Annie, 5%? Do you go by sort of similar thought processes?
You know what? I should take a page out of Kelley's book. I'm just like total like opportunistically. Like I need to be more organized with it, but that's the honest to God truth. But I couldn't agree more with what she said in terms of we are all passionate about different things when it comes to reproductive rights, maternal health, mental health, all of these things that are, crises in our country. And so that's really what I care about funding is companies like Julie, Poppy Seed Health, that are doing amazing things in reproductive rights, and Zant in the mental health space. So that's sort of how I look at it, is that, like Kelley said, there's opportunities to spend $10,000 to have a big table at a gala, where oftentimes a big percentage of that goes towards like the rubber chicken and the DJ and all of these things, when you can fund a for-profit business that's making huge impact,
I think that in terms of this impact question, that leads directly into the next thing I wanted to ask both of you, which is, outside of return on investment, when it comes to a future exit, how else can angel investing benefit you? And how do you view impact within your angel investments?
Yeah, I think that when we talk about the membership fees you pay to like those executive clubs, we won't name names, and like you get some ROI out of the people you're in the room with. I think times 100 when you're investing in women, and then you're beside other women who are investing in women, and you're learning a new language. You are learning about like the data and statistics I learn every day about how flawed our healthcare system is. I get so much information and education from the founders I work with, from the investors I'm investing alongside of, from the funds we're, investing behind. I think this is like the business school education that I never got, and always had a chip on my shoulder because I could never afford to go to B school. I've learned so much angel investing, and I have met the most incredible, inspirational people and women. And to me, I feel like I've already gotten paid back dividends and then so, just from being in this ecosystem.
Amazing. I love that. Do you want to add anything to that, Annie?
Just a quick add, I would say that I actually calculated recently all of the money that I've spent angel investing and all of the money that's come back through literally consulting clients, special projects, our accelerator. Like, I've actually made the money back through the network effect of this. And so again, like, a big part of what we do that's different from a lot of angel groups is that we do all of our stuff in person. So we introduce companies, we have all the angel investors introduce themselves. And then when we host our post-close, they can actually share and ask. And oftentimes people will say, I'm looking for consulting clients. I'm looking to leave my job and, have a new role. And you have this like great sort of group and network that you can get some ROI back. But yeah, always just like learning so much from every single investment. And it's basically like going to business school for, in another capacity.
In terms of this network and community, like, I know that the three of us, Kat and Breen also, are home based in New York, but we're all we're speaking here online. I hope that there's people from across the country. I feel like we should take Dream Ventures and Golden Hour Ventures on a 50-state tour to be like, we're talking to female founders, we're talking to diverse founders outside of just, New York City, outside of San Francisco, and having that in-person experience. I love it.
Yeah.
So, right? Let's do this someday. But so in terms of, I want to get in as a founder, I like to learn about the nitty gritty, right? And so we've talked a lot about what you look for in a founder. In terms of like specifics, when you come across a deck, right? In the pitch deck, what do you need to see in order to take a meeting? So you don't know this founder yet, right? And you've just come across their deck. Maybe it includes the market opportunity. What are you looking for besides a connection? So you need to meet the founder. And from that stage, what inspires you to actually write a check?
So I'm one of those people that I spend about 30 seconds to 1 minute in a deck. That's just me. I skim through it really fast, and it either resonates with a problem that I'm like excited to help solve, or it doesn't. Kelley, I feel like digs in a little bit more, like to like, the different, you spend more time, and all that. So I think it's just a different way of, I'm just like a gut investor, and we'll see how it all like pans out in the end, but.
I think to Annie's point, it's like you meet one angel investor and you meet one angel investor. And it's kind of like the beauty of being an angel investor. You don't have to operate within the confines of a VC firm. You don't have LPs to answer to. It's your money. You do what you want. You fund the founders you love. You fund the problems you care about. I can't, I come from the financial background, so I just find it impossible to take off that hat. I want to understand the margins and the opportunity and the scale possible here. And, what is the impact on the world if this company does scale? And is there a possibility for a return, or is it really just kind of looking more like a nice lifestyle business that this founder would probably never really want to exit? And it could be like a great company, but it's maybe just not investable for me. So I would say I do start there. There are some things that I just, I've seen some really, really cool decks, putting people into outer space, and I could never diligence it. I could never add value. It's cool and I'm cheering them on, but it's probably just not for me. So I think, again, it's super subjective. And again, the way we look at my personal angel investments versus what we're bringing to our angel network is really different too. For the angel network specifically, we want to de-risk that just a little bit, right? It's always going to be really, really risky to angel invest, but we love to be last money in around. We know that our checks, which end up being somewhere around $250,000 to $500,000, sometimes way bigger depending on the stage of the company if it's later stage. But early stage, our checks $250,000 to $500,000, like they're not going to change the trajectory of the company in like a major way. We know how much value we can bring from our community standpoint and impact, but it's a really great place to be if they already have some capital, they already have some traction, like a little bit of proof of concept at least, honing in on product market fit. And we know that we can kind of come in and close the round and bring this amazing community and all of the impact and, kind of take it to the next level. But I don't love to be, first money in with my little check and a short runway. That's not a comfy position to be in. So I would say like a couple of things that I just like check.
Is there anything you want to add to that, Annie?
I would just say that, like, again, when I first started in 2020, really, I was doing the really early stuff. Just even sometimes it was like a great idea, love the team, and a deck that I read for 30 seconds. And now fast forward 4 years in, my favorite kind of sweet spot is when the company checks all the boxes that we talked about, but also has a really strong anchor lead and also has done hopefully like 1 to 2 million in revenue. If we're doing an angel syndicate, because of the fact that, like, for us, when you're rallying the troops and you're bringing all these folks in, you really want to, like Kelley said, de-risk it as much as possible, because if the company does go under, which I've had 3 or 4, it's not so fun to be sending that email to like 30, 40 people, because you're the one that brought them in. So you really want to like try to de-risk it as much as possible. And that's why.
I think that also comes a little bit to what we spoke about at the very beginning of the hour about the difference between investing your like one personal check, right? Or bringing deals to your syndicate and investing as a syndicate, right? As a founder, I like to push back a little bit on this like heavy reliance on, de-risking something if you're investing, as an angel investor, just your personal dollars and not as a syndicate. Because as a founder, I'm like, if I can't go to angels when I'm graduated from my friends and family round, or I'm, maybe I don't have friends and family to go to, because a lot of diverse founders don't, where am I supposed to go for this first check, help and support, right? And I think that it comes back to a little bit what you both said, but I think Kelley, you said it really strongly about risk tolerance, right? What percentage of your portfolio do you allocate? Are you okay, losing that amount? And also, one of you touched on, here's a male founder, and it wasn't until his fourth startup that really took off and maybe became a unicorn, whatever, pie in the sky. So founders will need to have those chances and then get their lessons learned. But I'll add my little founder perspective onto that.
I totally agree with you, by the way. And it's, I just invested in a company that's like stealth pre-seed, not a drop of revenue, but build a relationship with the founders over a couple of months, really believe in what they're building, and wrote a personal check. It wasn't right for me to bring to the network because there's like no diligence that could be done. But that being said, I often like share deal flow with other angels in our network that's with that caveat. This hasn't been like golden hour ventures diligence or dream ventures diligence. There's a diligence process that we run before bringing that to our syndicate. But I frequently, share deal flow that's pre-seed, higher risk, just because I know that there's other folks who are willing to take flyers, and they're really, really important to this ecosystem.
Love.
Getting people to the stage where they are, later stage angel ready or venture ready. You need that early stage capital. I feel that problem really, really hard.
Same.
Thank you. Yes. So I think that this all ties in together. One of the questions that we have here is, what would be your advice for a new angel investor on writing their first check? How do they set expectations and align them with the founder?
You want to?
So when it comes to setting expectations, not exactly sure what they mean, but I would say when it comes to thinking about your first check, I would think about, what are you personally passionate about? When you think about your legacy and the impact that you want to have in the planet, when it's all said and done, what do you want to help power and like be, kind of supporting and all that. So I would start there. Like, what do you personally care about? It could be sustainability. We obviously have like a climate crisis happening. It could be something in that ecosystem, and any of the other maternal health things we've talked, women's health. I'm super excited about all the innovation happening there when it comes to women's health. So I would say kind of start there. Also, I've invested in several companies because I was a super fan customer, right? So like Brightland, that olive oil, I was like gifting that to every Tom, Dick, and Harry on the planet when it came out. And then I ended up doing a syndicate for them. So if there's any companies that like you just personally are a huge fan, if it's food, beverage, beauty, home, that's kind of fun too. Like to be a customer and a super user, but then actually be able to like invest and, participate in like the upside.
Yeah, I would echo that and say that I think the easiest on-ramp to angel investing is just your interest, what you're already passionate, what you're already bringing to the table in your own career. Like, do you know B2B SaaS really well? Can you amplify? Like, we find that in our network, consumer or like consumer tech tends to be the on-ramp for early angels, because it's the thing that's you're closest to. Maybe you're already buying it, maybe you're already gifting it, maybe you care about the product a lot, and so you already it's easier to kind of put your hands around how you can be impactful, and then from there you can kind of bleed out into other industries and segments. And I would say, as far as like establishing expectations, maybe just like the flow of communications, I would say is important too. Like, how involved does that founder want you to be? And does that work for you? And what's the cadence of communication? Like, the other riskier part of angel investing is that there is no financial disclosure really required, to your early angels. There's no cadence of communication that's required. It's fairly unregulated from an SEC's perspective, which is why you have to be an accredited investor, which maybe we want to touch on as well. So, kind of just having a meeting of the minds with the founders, like, how involved do you expect me to be? Does that work for me? How involved do I want to be? Will I get updates? Will you be transparent with information? Or, Do I just kind of have to sit tight? And I've learned that lesson as well. I've like invested and then just like, it's been crickets from the founder. And then I'm just like, hi. And I don't want to be that angel who's a pain, but also, I don't want to just like give my money and walk away too. I want to be involved. I want to know how I can help.
I think that what you've just said comes with communication and alignment in that, right? And so, I always said, when you're doing business, you might, have one offering and meet someone that is interested in your offering, but you don't click, right? And maybe they'll meet another person offering the same thing, but they have just a better communication style, right? So I think as an investor or as a founder, if you're meeting with someone and it's just like, yes, I'm passionate about your product or your company or your, the impact I could have, but the founder is like, I just wanted a check and walk away. And that's not how you invest, or that's not how you, align yourself with people. It's not a right fit, right? And so really great point about expectations. Another thing I think is, how heavily do you rely on exit plans, right? I think that it's important it's especially important for founders to know why they're taking investors' money, right? And so if they're saying, I'm raising from angels, but I'm going to run this business for the next 20 years and not go out and raise again, that's a problem, right? And so how do you handle those types of conversations with founders?
I always ask, what they're thinking. And there have been a few times, I remember I was hosting an angel investor event for a founder. This was early days, and I was trying to raise a syndicate for her. And she literally got up at that event, bless her heart, and talked about how this was her baby and she never plans to sell. And she just wants to build like a great business. And I was like, and everybody passed on the opportunity because they're like, love that for you. How are we going to get a return? So I think if you are bringing in investors, there needs to be some way for them to get their money back, which is IPO, selling, or there's potentially some way to do like a profit sharing. Like when we hit this milestone, people talk about that. I've never seen it done before. I think people should do it more, because I think you do need capital infusion sometimes. And if you don't want to sell, but you need money, like I think there should be a structure. I haven't seen it happen, but
the investor needs to understand and needs to know that that's the plan, though, right? Because if you have that complete mismatch, it's not the first time I've heard a story like the one you just told, Annie. So is there anything you want to add to that, Kelley?
I'm actively trying to, I'm going, don't digress, because I have so much to say on, there are so many companies out there that probably need a little bit of angel capital to scale, but they're not venture backable businesses and they won't have venture style returns. And there's a great opportunity for profit distribution. So like one day in the future, maybe we build that hybrid private equity model that just takes distributions for these wonderful companies that are profitable and never wants to share. But like, we'll save that for a different webinar. I would say, yeah, I always ask about exit plan, while knowing that when you're seed stage talking about an exit plan, like you're making it up. Everything at that stage is making it up, but you do have a vision and you have a plan, and that plan will change 100 times. But I want to hear that you've got milestones in mind. I think, right now more than anything, it's like, I hate when I'm talking to a founder and they're like, I'm taking in this capital to like fund our operations. That's scary to me. What I want to hear is, okay, we've got a handle on how we're operating. We're using some debt or some other facility to fund inventory, but this is how we're going to scale. So I know that my capital is going to or my capital combined with the rest of the capital that you're raising in this round is going to take you to a different level, which means your valuation will be increased. And now I can mark my investment higher. And that will continue with each fundraising round to get you to a point where now you're attractive for maybe an exit. And I would say a lot of times in the consumer space that usually looks like a merger and acquisition to a larger conglomerate or a PE buyout, or I think in very rare cases it's IPO. That's a big deal when that happens in the consumer space. But really, getting to 100 million in revenue and then becoming attractive to one of the larger corporations that are like snatching these companies up. So I want to hear really what your plan is with this capital and how it can get you to these revenue milestones, ideally with profitability in mind. Especially right now, like you have to have profitability in mind. So that's kind of what I'm looking at, like less like who is the buyer that you have in mind and how are you to achieve these milestones with the capital that you're bringing in.
Yeah, I always tell people, I tell founders that they need to be providing this information, but it's helpful for investors to think about what they're looking for, right? And so when I'm advising founders on their pitch decks and on their, what is the use of funds, right? It's like, okay, if you're taking in $500,000, it's going to increase the revenue by, I know how I'm going to deploy it, right? In order to get the money return on investment in the business to grow the business specifically, right? I love that, Kelley. So we're coming up on the end of our hour here. I have one general question from the audience that I think is a great thing to end on, which is they asked, if I'm not an angel investor yet, but want to support the community, what's the best way to do that? Who wants to go first?
Well, I would say that it could be supporting again with your wallet. So if there's a company that you feel passionate about, that you could support shopping from them, buying gift cards for like friends and family. And trying to think of other ways outside of angel investing.
Yeah, I'm with you. I think the power of consumption is really important. Again, back to that point, we women control 85% of consumer spend. Looking at where you're banking, who your legal partners are, and like where are their dollars going in their lobbying dollars, like just decisions like that, being really intelligent and informed about where you're spending your own money. Like imagine if all the women just stopped spending their money tomorrow, like the world would fall off the axis, capital become unglued, right? If like
it would stop spinning, the world would just stop.
So I think that, remember, it doesn't matter whether you are angel investing or not, you're out in the world every day voting with your dollars. You can buy women founded, you can bank places that are supporting the kind of causes that you believe in. Looking
Irina, to everyone, thank you for this session.
Welcome. I need one of those voices. Own the power of your consumerism, and also, shop women founded.
Awesome.
I just want to put our form in here for anybody on this call that wants to be added to our deal flow distribution list where you can learn about opportunities. We do things virtually, and we also host in-person events in New York, Miami, and LA all the time. So all you want to do is fill this out. I'm just going to put it in the chat here. And I'll also include Kelley's amazing diligence form. Is that okay, Kel?
Yeah, of course.
And Annie, just so you know, I dropped it in a few times.
Oh, you did?
I did.
I'm so sorry. I was not looking at the chat. Apologies. Okay, we're all good.
I also have a newsletter, being self-promotional as well, but I like to feature products that I love that are women founded, deal flow that's interesting, just news about what's happening in the M&A space. So if that's interesting to you, I can also drop that in.
Kelley, I just want you to know I read your newsletter word for word, and it's brilliant, and I love all the different aspects. So I highly recommend everybody on this call to sign up because it's great.
Favorite newsletter.
Yes, totally free. It's a labor of love.
One last thing in the spirit of self-promotion, I just want to let everyone know in this call, I shared a link to a form. So if you are part of the Fourth Effect, we have an SPV that we have launched, and that if you are interested in investing in our SPV, we will accept smaller check sizes, but if you can invest 2,500 or more, then you qualify to, or you become eligible to become an equity member, which is a free lifetime membership in the fourth effect. So if you are an accredited investor, or you're interested in this at all, please direct message me, Kat, or fill out the form that we shared in the chat.
We love it.
Thank you, everyone. Amazing conversation. Thank you, Abby, for directing such a great conversation. And thank you, Kelley and Annie, for being here. We really appreciate it. And it was such a valuable conversation.
Thank you so much. This was so much fun.
So much fun. Thank you for having us. Very grateful.